Alert! The U.S. Mint just sold platinum at $2,345 an ounce, while the spot price soared to $2,470. This happened during one of history's biggest precious metals rallies, gold hitting $4,530 and silver reaching $75. Today I'm going to break down the powerful macro causes behind this explosive move, reveal the truth about the U.S. Mint scandal, and show you exactly how to position your portfolio for what's coming in 2026. You are not going to want to miss a single second of this. So why does this insane rally even matter to you? Let's look at the numbers. We've seen gold up 70%, silver up a staggering 150%, and platinum up 65%. At the same time, the US dollar has fallen 11%. What does this mean? It means inflation is actively eating away at your savings. A weak dollar is punishing anyone holding fiat currency, and rising global tensions are cranking up market volatility. Precious metals have always been a smart hedge, but 2025 is proving to be truly historic. We're witnessing a super rally, driven by a perfect storm of factors and massive structural demand. If you don't understand the causes behind this move, you're going to miss the opportunity of a lifetime. So let's get into the solution and break down the specific macro causes fueling this fire. First, the crashed dollar. An 11% drop makes commodities like gold, silver, and platinum irresistible to buyers around the world using other currencies. It's like a global discount sign. Look at the evidence. Platinum's spot price shot up to $24.70, while the US Mint was still selling based on older, lower prices. Second, the Federal Reserve is cutting interest rates. When rates go down, the opportunity cost of holding non-yielding assets like gold disappears. This is a huge reason why gold has rallied over 70% this year.
Third, persistent inflation. This isn't going away. It's forcing central banks worldwide to find a safe haven for their reserves, and they are buying gold by the ton, over 850 tons to be exact. Finally, massive fiscal deficits are leading to record demand for precious metal ETFs and even fueling short squeezes in the silver market.
The breakdown is simple. A weak dollar, Fed rate cuts, and runaway inflation have created an explosive, verified rally. This isn't speculation. It's happening right now. Now for the headline story. The U.S. Mint selling platinum for 5% below the market price. How did this happen? It's not a conspiracy, but a dynamic of how they operate. The U.S. Mint sets fixed prices for its products, often on a weekly basis. When the platinum price rallied so hard and so fast, it outpaced the Mint's pricing update. For a brief window, they were selling American Platinum Eagle proof coins based on the old, lower price. The result? Absolute chaos. Their entire stock was wiped out in hours. The demand surge was so intense that many orders had to be canceled. We saw this play out on social media, with traders on Reddit and X sharing the news, creating a buying frenzy. This isn't the first time it's happened. We saw similar dynamics during the 2008 and 2011 rallies. It's a verified, real-world example of the incredible market forces at play. So, what's next? Let's look at the projections for 2026 and the potential risks. Most analysts are extremely bullish. They see gold pushing past $4,900, with some targets as high as $5,000 or even $5,500. Silver is projected to hit $80, driven not just by investment demand, but also by its critical role in industrial applications like hydrogen technology and automotive manufacturing. The overall macro bias remains strongly bullish. However, you always have to consider the risks. A sudden rebound in the dollar could put temporary pressure on prices, or we could see a speculative correction after such a strong run-up. The smart strategy here is not to go all in, but to allocate a sensible portion of your portfolio, say 5 to 10%, to precious metals. The easiest way to do this is through regulated ETFs. Okay, so what's the actionable takeaway? How do you get positioned? The simplest method for most investors is buying gold, silver, and platinum ETFs through major global brokers. They're liquid, regulated, and easy to trade. If I had to pick one right now, my personal focus would be on silver. Why? Because on top of its safe haven status, it has incredible industrial upside that gold and platinum don't have to the same degree. If you want to dive deeper and learn how to analyze these markets like a pro, I've put a link to my 2026 financial analysis course in the description below. It covers everything we've discussed today in much more detail. Make sure you subscribe to the channel, hit that like button, and for special alerts on this topic, comment platinum down below. The time to position yourself is now. Thanks for watching.